Good morning, traders. Welcome to this FXDD video on the euro dollar and pound dollar. My name is Chris from Elite Currency. Before diving into the charts, be aware of this risk disclaimer. It explains the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this video is for informational and educational purposes only. Wanted to let you know also about these two live trading links, basically webinars where you can join us. Top one for live trading webinars and bottom one for live educational webinars. And if you want to see the recordings, of course, please subscribe to the FXDD YouTube channel, not only for the recordings of these webinars, but also, of course, these videos with analysis from Nennet and myself. All right, as always, starting off with the euro dollar looking absolutely bearish to me. And I think that there's little to dispute about that with this bear flag in place at this moment. Price very aggressively moving here, very impulsively, making a bear flag, and as expected, a continuation. There was some, volatility, struggled at 110. That is not so strange. Obviously, that's a strong round level, and it created a bigger bear flag than this. This was a small one. This is a big bear flag. But in both cases, those flags are typically continuation chart patterns, and I don't see any fractal here. Price action that is really pushing far to the upside. Price really limited and capped by a 110.25 resistance. That is a very mild and weak retracement. I don't see any momentum to the upside here. So it would have been different if price were able to break above the 144 May and the weekly pivot point, but it did not. And it just absolutely went sideways like that. So it looks like an ABC pattern is completed and price is now in the downtrend continuation. A break below 110 should see a continuation down to 109.50, 109.40. If we zoom out to the 4-hour chart, it looks absolutely bearish too. Ton of candles below the 20 EMA, fractals below the 20 EMA, and typically in that case, the 20 EMA holds as resistance, as we already had a bounce right there. So I see a good chance of continuation. And because of that, because of this price action so bearish, this is more of a ABC than a 5-wave. That changed perspectives. And at this moment, I'm leaning towards 5 waves up here, and this being ABC, like this, for as part of a complex correction W, ABC up for X, and I'm expecting ABC down for Y. Now, I'm not sure if this is the A, and this is the B, and this is the C, or this is still A, and we go up for B and then for C, but what I do know is that looking at this, one more lower low, and a breakout is likely to aim for the next fib. And if I put the fib from this bottom to this top, that the next push lower should aim for the 78.6 fib at 109. Hang on, there we go, 109.42 here, as you can see. So I think that this breakout, that's where the breakout could aim for in a WXY. I'm still leaning towards either a 1 or A, and this being a 2 or B, and up for 3 or C. So if that is true, then I should see strong bullish price action at the 78.6 fib or the 88.6 fib. 78.6 fib is more likely. If it is a bullish pattern as I expect. Now, of course, if price does break below this bottom, that would invalidate both the ABC zigzag and the 1-2-3 pattern. So that is a key level, 108.78. If price pushes through that, then this is not a bullish reversal. Then in that case, I was wrong about this five-wave pattern, and it's an ABC instead. Those things can happen sometimes. So if there's a strong momentum pushing and there's no close in reverse, but rather a bear flag, well, that could be a first signal that a bigger reversal is taking place. Of course, the break through this bottom also means that there's a strong chance of a downtrend continuation. For the moment, though, breakout below 110 should see a follow through to the 78.6 fib. Pound dollar. Let me renew that template. Here we go. So more or less the same thing, looking bearish to me as well. And we had some good breakout here and here. Good follow through. ABC up pretty aggressively, but still hitting the 129 resistance, becoming kind of an equilibrium level, and that worked as a bouncing spot too. Break below the 20 in May, and the weekly pivot point saw a good follow through, pullback, and now a continuation. And I think that here too, with this break, basically price is likely to continue lower. We got a breakout already here. So that's on its way. I think the target is somewhere around 127.50. This looks like an ABC to me for W. This looks like ABC for X. Complex correction here, and a probably ABC for Y as well, or maybe yes, but in any case, it looks bearish from this perspective because we got lower lows, lower highs, and looks probably like an ABC pattern as well, or some 5-wave pattern, but we'll dive into that later. I don't think it's that relevant. For the moment, with this breakout, a move down to the S1 at 127.75 is likely, and I think it could extend towards 127.50, even the S2 maybe at 127.20, 20-ish. The 144 EMA is providing support here, here, and here, but this is the third breakout attempt, so more and more likely that price will actually push through that 144 EMA and make that breakout. Back to the hourly. Quick look at the daily here. Daily bearish candles too. I see bearish price control here. But once again, if it reaches 127.50, it could be a bouncing spot, by the way, because this is all in all, we're looking at the daily, a bull flag, okay? And the bull flag is hanging above the 20 EMA after strong momentum to the upside. So if it hits the bottom of the bull flag, it could definitely be a bouncing spot. 127.50, 127.70, okay? In my view at least. Back to the hourly chart. I think that looking at this formation here, well, likely that price will basically make somewhere a bounce, I would say, up here at 128.50 and make that continuation down to 127.70. If it were to break above the weekly pivot point, that's the first moment I would be a little bit worried about the downside. That's at 128.75-ish, 128.80. That's where I would not expect price to break above. Otherwise, I would be a little bit worried that price is breaking above this trend line and the resistance zone here, and that would not necessarily be that good for the bears. In that case, maybe there's an expanded correction. Price could make it maybe back up to the R1 here at 129, I think 30. Hang on, 129.35. All right, so 128.75, 128.80, very important for like a last defense of any potential downside. All right, that's it for now. Thank you for joining once again. FXDD YouTube channel. Subscribe, please, to get all the videos and webinars and recordings, of course. Wish you great trading. See you in the live webinars, and have a great week. Cheers. Bye-bye.